Hello friends, discuss the chapter 8 of advanced bank management, the monetary policy and fiscal policy. Friends, this is the very important with regard of your CIB examination. For ABM, this unit is important. Okay, so we'll discuss MCQs based on the same. Okay, so let's see first MCQ. What is what are the common objectives of the monetary policy? They are asking what are the common objectives of the monetary policy. First option they have given: to keep inflation under control, to achieve a high rate of economic growth, to maintain full employment, and all of the above. So friends, see here basic. What do you mean by for the first monetary policy? So friends, see here the word monetary. Monetary basically includes some money, and money is nothing but managed generally by RBI. So remember, RBI decide the monetary policy. RBI decide the monetary policy, and how RBI can control the money in the market? Basically, monetary policy means basically demand and supply of the money. It is basically demand and supply of the money. How RBI control? We know the CRR, we know the SLR, right? That means through these tools, RBI can control cash in the economy. RBI can control cash in the economy, or we can say cash with the banks. That is the basically demand and supply of the money. So RBI controls money in the market. Okay, that's why it is called as the monetary policy. Okay, now see, if there is changes in the CRR, you know CRR means the cash held in the cash held with RBI, right? And the SLR is statutory liquidity ratio. So these are the that amount must be kept with RBI. We will discuss one by one in later, but here take a brief view. So how much should be cash bank should kept with RBI? So that control basically a monetary policy. That's why it is also used to keep inflation under control. How? If there is more inflation, that means money from the market. See, if there is a more inflation, then money from the market, that is a dollar, should be sucked to the RBI, will absorb the money from the market if there is inflation. Okay, so and how it is carried out? By the way of CRR SLR. Okay, by the way of increasing CRR and SLR. Second, to achieve the higher economic growth. So if government or RBI decides it should have a higher economic growth, then if there is a recession time, then definitely RBI will infuse money in the market so that there will be economic growth. To maintain full employment. See friends, to maintain full employment, here the meaning of a full employment is that to reduce the unemployment. Okay, to reduce the unemployment is nothing but the full employment. How the unemployment can be reduced? By if there is a good market, good economic growth, automatically employment will reduce, and for that also the monetary policy indirectly works. Okay, so we have to mark first option as the correct option. Now we have to mark here the 4, that is 1 2 3 4, all of the above are correct. Okay, now question number 2, fill in the blanks. By buying or selling dash dash, the central bank affect the money supply and interest rates. See friends, what they are asking: by buying and selling of dash dash, the central bank means RBI can affect the money supply or the interest rate. How? What the RBI buy or sell? RBI buy or sell the government securities. Buy and sell the government securities. Okay, so first option gold is not correct. Government securities is the correct option, not a forex, not a private securities. Okay, RBI directly deal with the government securities, and through that there is a buying and selling of a government security. Through that the money supply as well as interest rates are controlled. Okay, money supply is generally controlled by the CRR plus SLR. Okay, and in case of interest rate, we know there is a repo rate, there is a reverse repo rate, and also there is a bank rate. So different tools to control the interest rate and money supply through these two tools. Okay, now next question, question number 3. See, question number 3. What does the monetary policy manage? See, what does the monetary policy manage? I have already explained here, right, how the monetary policy works. See, first option they have given money supply and interest. Second option only interest. Third option the money supply only, and fourth bank credit and interest rate. So basically money supply, the monetary policy is deal with the money supply plus interest rate, money supply plus interest rate. How? Money supply through the CRR SLR, and interest rate by the way of bank rate, repo rate or reverse repo rate. Okay, I have already discussed this in the previous question. So correct option you have to mark here is the first option. Both the money supply as well as interest rate are controlled by RBI using the monetary policy. Okay, now question number 4. Which rate is also called as a discount rate? Which rate is also called as the discount rate? So friends, first option repo, second option reverse repo, third is a prime lending rate, and fourth is the bank rate. Remember friends, it is one of the important question that the discount rate is also called as bank rate. Okay, discount rate is also called as the bank rate. You have to remember how and why that we all are going to discuss. Okay, here you just remember your discount rate is also called as the bank rate. Okay, it is easy to remember. Then we will move to the next question. We will discuss what is a discount, why we call it discount, what is a discounting, what is a rediscounting, that we all will discuss in the next MCQs. Okay, here you have to remember bank rate and discount rate are same. Okay, now question number 5. The share of net demand and time liability, that is a NDTL, that bank must maintain as a cash balance with the RBI is known as. Okay, see friends, this question is very easy, you all know the answer, but the framing of the question is in a complex word. Basically they are asking the share of NDTL that bank must kept as a cash. The as a cash is word is very, very important here. You have to maintain some amount of your NDTL, that is net demand and time liability, right? So in the form of a cash with RBI. So what is that? We all know we kept some cash with the RBI, and that cash is kept with the RBI, and that is maintained. That how much amount of the cash should be kept with RBI, that is decided by CRR, and it stands for cash reserve ratio. It is very easy. Here is the word cash, here is the word cash. You can also guess, but it is very easy to understand. Okay, now the next question we will discuss, question number 6. Fill in the blanks. The LAF, that is a liquidity adjustment facility, is a monetary policy tool. It is a monetary policy tool which allows banks to through the repurchase agreements. So we have to here they have missed to put the dash, the typing team. Okay, no problem. The liquidity adjustment facility is a monetary tool through which tool which allows banks through dash, here should be the blank space, through the dash the repurchase agreements. See, the liquidity adjustment facility is a monetary policy tool which allows banks through repurchase agreement, which allows banks to adjust SLR, lend money, to borrow money, to pay money. Here should be the blank space. Here they have missed to put the dash. Okay, So here we will put blank space. Where we will put blank space. Okay, see, now see the question. Through the LAF, it is a monetary policy tool through which allows banks to dash dash through the repurchase agreements. That means they are asking, basically, see here, LAF is used for. LAF is used for. Forget the question. Now tell me the LAF is used for what purpose the LAF used? First option, to adjust the SLR. Second option, lend money. Third option, borrow money. Fourth option, pay money. So friends, correct option here is the borrow money. LAF is used for borrowing the money. LAF is used to borrow the money. So friends, see here, through LAF, what happened actually in the LAF stands for the liquidity adjustment facility. So it is a facility given by RBI. It is a facility given by RBI to the banks, that bank can borrow money from the RBI. There is money going to the bank, and in that return, bank need to purchase some securities. That is basic, the liquidity adjustment facility. Okay, and it is important to manage the liquidity in the banking system, right? So this is the facility available right now. So we have to mark, just remember here, the main important thing you have to remember, the LAF facility is used to borrow money. Okay, just remember that LAF is used for borrowing money from RBI, and it is used by banks. Okay, so answer is the borrow money. Next, question number 7. On whose economic theories is the idea of a fiscal policy is based? That means, on whose economic theories the idea of a fiscal policy is based. They are asking, the fiscal policy idea is given by whom? Basically, is given by whom? Remember friends, it is also important question. The idea of a fiscal policy is based on the theory of first option Alfred Marshall, second option Milton, third option K.M. James, and fourth is the Lewis. So friends, remember, the idea of a fiscal policy is based on theory of J.M. Keynes. We have studied one important theory, right? That is Keynes liquidity preference theory. Okay. So here one important point you have to remember about the Keynes, that the idea of a fiscal policy is based on Keynes theory. And what was that theory? It was about the Great Depression. Okay. Now question number 8, fill in the blanks. Okay. If in the face of a mounting inflation and other expansionary symptoms, the government can pursue dash policy, perhaps even to the extent of including a brief recession, in order to restore a balance in the economic cycle. So friends, before that I will explain you some things about the policy. Basically, the one is the contractionary policy and second is the expansionary policy. Expansionary means you are doing the things to expand the economy, and in a contractionary policy you are doing the things to reduce the economic activity. Okay, so it is common sense how to implement a contractionary policy. It is a contractionary policy, how to implement when you want to shrink the market, and when you will shrink, if there is inflation, when the inflation occur, if there is excess of money supply, then only inflation occur, and to combat that inflation you will adopt the contractionary policy. And when you will adopt expansionary policy, if there is a recession, then in that background you have to boost the economy. That's why you will adopt the expansionary policy. Okay, difference between them is clear. Now come to the question. What they are saying, in the face of a mountaining of inflation, that means inflation is at the peak, and other symptoms of all are the expansionary symptoms. That means basically remember here word, the inflation. Here the inflation is at a peak. Inflation is at a peak. So which policy the government should pursue? Okay. So correct option, we know when there is inflation, that means there is a excess of money in the market, and to control that money we should use the contractionary fiscal policy. Okay, so it is very easy. Okay, so you have to mark the contractionary fiscal policy we government should pursue. Question number 9. Spending tools refer to increase or decreasing with which type of expenditure to influence the economy. Okay, spending tool refer to increase or decreasing type of expenditure to influence the economy. So basically they are asking what is the spending, what is the tool must be used for increasing or decreasing the expenditure. What the important here, you have to remember the government. Which tool? The government uses, remember, the government uses the spending tools for increase or decrease the expenditure. Okay, so correct option here is the government. That means here you have to here should be the dash, so that government spending tool refer to the increasing or decreasing the expenditure to influence the economy. So important is the government. Who is the doing spending? Basically it is a government spending are very important. Government spending is a very important, because the highest spending can be done by the government. Okay, and it is very easy question, but the language framed in this question is a tough language to confuse you more. Okay, IIFF is not doing apart from that, right? They will make some complicated language, they will use a complicated language in the exam and try to make you confused. But remember, be confident, just read questions carefully and mark the answer. Okay, so here I will repeat here, the spending tool refer to increasing or decreasing which type of expenditure to influence the economy. Basically they are asking which type of expenditure used for influence the economy, so that the government spending means government expenditure. That tool is very important, because maximum expenditure can be borne by the government only. Okay, and the government is government has the capacity to control and combat the inflation. Private sector, corporate, individual don't have that capacity to control the economy and combat the inflation. It is the role of the government, and it is also the capacity of the government. Okay, now question number 10. Fiscal policy is implemented each year to promote the economic development of a country. Who implements it? So basically they are asking who implement the fiscal policy. First option, President, Ministry of Finance, Monetary Policy Committee, Reserve Bank of India. So friends, it is very important question. We know President will not implement. We will confuse in the three options. But remember, the most accurate option here is the Monetary Policy Committee. The MPC is responsible for the implementation of the fiscal policy. Okay, next question. For what purpose is taxation used as a tool in India? First option, foreign trade, monetary policy, fiscal policy, poverty. So friends, see here, the purpose of a taxation is used as a tool. See friends, taxation is used in the fiscal policy. Taxation is tool of a fiscal policy. Taxation. Why? We know the tool of monetary policy, right? But in a fiscal policy, what is the fiscal policy? The taxation is used for what? If you increase the taxes, then it is a contractionary policy. If you decrease the taxes, it will be expansionary policy. It will be expansionary fiscal policy. Okay, so taxation is a tool of the fiscal power, fiscal policy. Obviously not a foreign trade and poverty. These two options you can eliminate easily, and we know the monetary policy very well, so remaining is the only fiscal policy. And what is the fiscal policy? Fiscal policy is a contractionary, or it can be a expansionary. So if you increases the taxes, it will become a contraction in the market. If you reduce the taxes, it will become expansion in the market of the fiscal, for the fiscal policy. Okay, question number 12. What is the GDP estimated fiscal deficit for 2020-21, a percentage of a GDP? That means they are asking what is estimated fiscal deficit for 2021 as a percentage of a GDP. So friends, remember, it is a 3.5%. It is a 3.5%. It is also important, you have to remember, because it is a current year. They may ask for only half mark, they can ask. So it is very easy to remember. Just it is a 3.5%. Actually, government has decided it is according to the FRBM Act. Also remember, it should be not beyond 3.5% ideally. But during COVID, it has almost crossed 6%, more than 6%, more than almost 9, up to 9% it reached during the COVID, the fiscal deficit, because the income of government, that is revenue, gets stopped due to the economic activity was slowed down. That's why the fiscal deficit was very high. Right now, see here, also take one important information here. Right now, government is planning to officially there was statement by our finance minister that they will try to maintain 4.5% of a fiscal deficit, right? So they are not able to maintain this, but it was the ideal they have kept. Okay, so if a question came in your examination, just remember 3.5% they are planning. Okay, now based on that, there is also one more question, we will also discuss that. Question number 13. Fiscal Responsibility and Budget Management Act, that is also called as FRBM Act. FRBM Act. That is the Act of a Parliament of India to institutionalize the financial discipline, reduce India's dash. Next, improve the macroeconomic management and overall management of a public fund by moving towards a balanced budget and strengthen the fiscal prudence. So friends, see here, what they are asking in such a long question is just that FRBM, remember, you have to remember here, the FRBM Act was enacted in 2003. First you remember that, okay? It is enacted in 2003, okay? Next, what you have to next see, what they are asking, that according to this FRBM Act, the government according to this act, this is Act of Parliament, and why this act basically enacted? To reduce what? To reduce India's what? First option, taxation, import of the goods, borrowing, or the fiscal deficit. Remember, the FRBM Act was enacted, only the main objective was to reduce the fiscal deficit. What is the fiscal deficit? Basically, the fiscal deficit is nothing but your expenditure minus earning, because your expenditure are more and earning are less. That's why it is expenditure minus earning. It is basically a difference. That is basically a shortage. That is called as deficit. Okay. Now they are asking basically the act, that is FRBM Act, is used to reduce India's. The main objective of FRBM Act is to reduce the fiscal deficit. Also, there are supporting objective. For example, the macroeconomic management. The macroeconomic means the economy at large, right? The macroeconomic management. Also, overall management of the public fund. Okay. just remember that fiscal, that FRBM Act is used to minimize the fiscal deficit. Okay, see here some information is given about the FRBM Act. The purpose of FRBM Act only to reduce the India's fiscal deficit, also to improve the macroeconomic management and also the overall management of the public fund. That is basically three objectives, but the main objective is to reduce the fiscal deficit. Okay, very easy. Now the term money market transaction are those which have maturity over how many days? So friends, remember, the term money market is generally the market where the maturity is beyond 14 days. 14 days your answer. Why? See here. Basically, the generally the what do you mean by money market? First listen that. What do you mean by money market? Basically, it is a interbank market. It is basically a interbank market where for the deposit having period more than 14 days. It is interbank market. Basically, it is a interbank. One bank can have a deposit with other bank, and that duration should be more than 14 days. Okay, and that's why our correct option here is the 14 days. The term money market transaction are those which have maturity over the 14 days. Okay, next question number 15. In which of the following market ASBA is used as instrument? So friends, what do you mean by ASBA? ASBA stands for, see here, the application supported by blocked amount. See, what is the application and what is the blocked amount? See, application, see, suppose you are applying for purchasing an IPO. So this is called your application. Okay, so what is the see here, correct option here is the primary market. So what is the primary market? First understand that the primary market. See, the primary market is a market where the government or the securities are issued first. What is the best example? IPO. What is the best example? IPO, because the securities are issued first. That's why it is called as the primary market. And what is the secondary market? It is a market where that securities are traded. Okay, so there is difference between primary and secondary. Now they are asking ASBA. So friends, as per the ASBA, what happens? Suppose you want to have an IPO. Suppose you want IPO in the primary market. Okay, so what you will do? You will apply. So that's your application. And if you apply by using the ASBA, then your amount in the account will be blocked. And it will be debited. If your application is selected for IPO. If your application for IPO is rejected, then your amount in the account will not be debited. That's why it is called as the application supported blocked amount. Okay, it is very easy, and I think it is clear to you. Now what you have to mark, ASBA is used mainly instrument in the primary market. That you have to remember. ASBA is mainly for the primary market, because in primary market we are dealing with the securities which are issued first time, which are new, that we can say newly issued securities. And for that you can remember the example of the IPO. Okay, now question number 16. What is the maximum period for which eligible financial instrument can be issued a certificate of a deposit? What is the maximum period for which eligible financial institution can issue a certificate of deposit? Remember friends, the certificate of deposit can be issued by very first bank, and it can be issued by the other financial institutions. Okay, so that too can issue that certificate of a deposit. And if it is issued by the bank, then the duration should be 7 days to 1 year. That means minimum 7 days and maximum 1 year. but if it is issued by the financial institution, the duration is 1 year to 3 year. Okay, that is called as the certificate of deposit. So remember, for a bank also and for the financial institution also. So what you have to mark here, they are asking about the financial institution, so they can have a maximum up to 3 years. So fourth option you have to mark. Okay, now next question, question number 17. Since when as FEMA has been effective from? So FEMA, we know the FEMA stands for the Foreign Exchange Management Act. Okay, and it is effective from 2000. That is Act FEMA 2000. We generally write as a FEMA 2000. Okay, it is very easy. Next question number 18. In India, who prepare the monetary policy? First option Niti Aayog, the Ministry of Finance, Indian Banks Association, or the Monetary Policy Committee of RBI. We have discussed already, the MPC of RBI prepare the monetary policy. Okay, now the 19th question. See here, in the 19th question, what is and are purpose of a buy side of a open market operation? What is and are the purpose of a buy side of the open market operation? So friends, see here, first option they have given to ease the availability of the credit, to reduce interest rate, to encourage the business to invest more. So basically, what is open market operation? See friends, open market operation is generally used by RBI. For what? See, this is a market and this is RBI. If RBI want to absorb money from the market, RBI will purchase the security. RBI will sell that securities. Okay, and if RBI want some more liquidity in the market, they will purchase or buy. If RBI want less liquidity in the market, RBI will sell the securities. Okay, so basically, see here, here RBI, if RBI buy in the open market, buy means the instrument goes to RBI and money will goes to the market. So money will be going to the market in case of buying, and when there is money goes to the market, there will be availability of the credit, then there will be obviously interest rate will be reduced, and there will be boost for the investment. Okay, so first, second and third all are correct, and the exact reverse will happen the case when there is a selling case. Okay, when RBI sells, then there will be absorption of money from the market under the open market operation. Okay, this is very easy and basic to understand. See, if you want, you can read the explanation also. The purpose of a open market operation is to do the ease the availability of a credit, to reduce the interest rate, and which thereby encourages business to invest more. Okay, and consume and spend more. Basically, that all I have told you. Now, the question number 20. Who is the chairperson of the Monetary Policy Committee constituted by central government in September 2016? Generally, the main chairperson of MPC is always governor of RBI. So here is also government of RBI. Okay, so finance minister, prime minister, secretary, they are not part of MPC. MPC is total we can say under control of RBI. Obviously, the government do the influences, but the officially chairman is the government of RBI, governor of the RBI. Now, question number 21. What is the rate charged by RBI for a loan provided to the commercial banks? So remember friends, we know the RBI can give money to the banks. Okay, if it is in the form of a loan, then that rate is called as bank rate. It is, and if RBI gives some money to the bank by purchasing the security, the security will go to RBI and that money will go to the banks. If the purchase of a security is involved, then it is called as the repo rate. There is a repo transaction. Okay, the money borrowed by bank from the RBI by purchasing the security, that is called as repo transaction. And if the loan is taken, if just loan is taken from RBI by the banks, the rate is called as bank rate. The rate is called as bank rate. Understand the basic difference. Now tell me the answer. The loan provided to the commercial bank by RBI is known as reverse repo, bank rate. It is a bank rate. What is overnight rate? I don't know. Okay, the bank rate is correct option. Now, question number 22. It refers to the penal rate. It refers to the penal rate at which bank can borrow money from central bank. Bank can borrow money from central bank over and above what is available to them through the LAF window. What is it? So friends, see here. First option they have given MSF. It is a correct option. Reverse repo, penal rate, repo rate. It is not. Okay. So first option MSF is the correct. See friends, MSF. See some facts about the MSF. MSF stands for marginal standing facility, and limit for MSF is the 1% of your NDTL. Okay, maximum limit is 1%. And MSF, it is used for emergency purposes, and it is generally a overnight. Okay, and it is available only to the scheduled commercial banks. What is scheduled commercial banks? Which are included in the second schedule of RBI. Okay, it is facility that remember the MSF facility is only available to the scheduled commercial banks, and also the time period is generally 1 day. Generally time period is 1 day. Okay, these are some facts about the MSF. So friends, here through the LAF window, the bank can borrow money from the RBI, and that is called as the marginal standing facility. That facility of borrowing money from RBI. Banks borrow money from RBI through the LAF window. That facility is called as marginal standing facility, and I have already discussed some basics about the MSF. Okay, you can read the explanation. No need to further read the explanation. We will move to the next question. What do the revenue tool refer? Basically, what the revenue tool means, or what do the revenue tool refer? First option, export, the tax collection by the government, capital gain, new ventures by the enterprises. So friends, basically revenue itself, it is earning for the government. Revenue means income of a government, and how the income generates? By the tax collection. Okay, very easy. Next question, question number 24. What steps can government take to reduce the what steps can government take to restore the balance to the economic cycle under contraction fiscal policy? So I have already discussed to you, the name itself, it is a self-explanatory. Contraction means you have to reduce the money supply in the market. So what you will do to reduce the money supply in the market? You will increase the taxes, and reducing public spending, definitely you have to contract for the contractionary fiscal policy. Cutting the public sector pay jobs, obviously. So under the contractionary fiscal policy, these all are the objectives you have to achieve, or all the things you have to do. So fourth option is the most correct option. Okay, now the question number 25. Select the most appropriate option to fill the blank. First, which monetary policy is concerned with the overall supply of money within the economy? Fiscal policy is concerned with the how money is dash and dash by the government. So friends, what they are asking, see, they are asking basically the fiscal policy is concerned with how money is dash and dash by the government. We know the fiscal policy, the aim of fiscal policy is how to earn money and how to spend money. How to earn money and how to spend that money. So we know the fiscal policy is concerned with how money is spent and how money is collected. Okay, so first option is correct. Earned is correct, but saved is not correct. Saved is correct, but supplied is not correct. Saved is not correct, and supplied it may be correct. Received may be correct, but saved is not correct. So money government don't want to save the money. Government is just an entity who will earn the money and spend for the public welfare. Okay, and this can be done by using the fiscal policy. And if your spending is more than your earning, then the condition is called as fiscal deficit. Okay, now question number 26. The rate at which RBI lends short-term money to the banks by purchasing government security. Here, see, I have already told you, when RBI gives money to the bank and purchases some security and gives money to the bank, that transaction is called as, at the rate is called as a repo transaction or the repo rate, because the security purchase is involved. Here we will take dollar. Money is going to the bank. In that return, RBI purchased some securities from the bank. So that transaction occurs at the rate is called as the repo rate, and that arrangement is called as the repo rate transaction. Okay, basically it is a repo rate. Remember, if there is no security purchase is involved, if there is no security purchase involved, then the transaction is called as at a bank rate. Okay, if the security purchase involved, then it is a repo rate. Okay, now question number 27. We have to cover almost 50 questions, so we'll move fast. Which of the following is not a feature of a contractionary monetary policy? Contractionary monetary policy. Contractionary means reduce. So first option, increase money supply in the economy. It is not a feature. It is not a feature of an Indian economy. We have to find not. So obviously we have to decrease the money supply in the economy. It is used to inflationary situation. Yes, if there is inflation, we have to control the money supply. Interest rates are kept high because we have to contract the money supply. So it is also correct. So to increase money supply in the economy, it is a feature of a expansionary fiscal policy, not a contractionary fiscal policy. Okay. Now question number 28. With which of the following statement is not correct? Again we have to find not correct. Okay. First statement, repo signifies that the rate at which RBI inject liquidity in the banking system. It is correct. By increasing repo rate, borrowing by the banks become less expensive. Whether it is less expensive, if a first statement is correct, if RBI gives money to the bank and the rate at which it is given, if you increase, it will be more expensive, it will not less expensive. So it is not correct. Okay. Next, the reverse repo rate signifies the rate at which RBI absorb liquidity from the banking. No, it is the rate in which RBI lend to the banking system. Okay, not absorb. So it is not correct. See, question number 3. Here it is a reverse repo. Here is the reverse repo. So it is correct. Reverse repo is a vice versa. For example, banks gives some money to the RBI. Bank doesn't give the money to RBI. Actually, bank park their money with the RBI. In that return, RBI gives some securities to the bank. Okay, so that is a reverse transaction. And if a reverse repo rate increases, it will be used to absorb the liquidity from the banking system, because money goes from bank to RBI. Okay, it is also correct. Now, by increasing the reverse repo rate, the earning for the banks becomes attractive. Okay, it is correct, because the reverse repo is the repo rate at which bank's money is given to the RBI. That's why it will be more beneficial for the bank, because their money is going to RBI and they will earn some interest by the reverse repo. Okay, so it is also correct. So we have to find here is the wrong. Wrong is the second question, which is the wrong. It will not less expensive, it will be more expensive. Okay, we have discussed all the statements. Now question number 29. As per FRBM Act, the original fiscal deficit target for 2021 was 3.5%. Remember, they will ask this. I think this may be a definite question for your examination. Generally they are asking the fiscal deficit target for the current years, And right now this question is expected question, because that original target was 3.5% original target, but due to the lockdown and corona situation, the target that deficit went around 6 to 9%, very high. So recently FM told that we will try to be about 4.5%, but the original target, here is the word, here is original target was the 3.5% for 21. Okay, now question number 30. In India, the SLR percentage can be fixed by dash dash as a maximum of a dash dash of the NDTL. Remember, here the SLR percentage is fixed by always. First option they have given RBI, Ministry of Finance, RBI. We know the SLR is always fixed by RBI, and important is the percentage. What is the maximum percentage of SLR? SLR highest limit of SLR is 40% of NDTL. Okay, remember it is a 40%. Sir, what about CRR? So friends, for CRR there is no minimum or a maximum limit. There is no minimum maximum limit, but for SLR it is a 40%. Okay, it is a 40%. Remember, important. So what will you mark here? Correct option. Option number 3, that is RBI, and 40% is your correct. Okay. Now question number 31. Expand SLR. So friends, here is a question for 0.5 marks. It is very easy. We know the full form, but what happens sometimes, you will if you are in a hurry, you will mark somewhere else. You will see ratios. If you look overall, you will see all options are nearby same. But in such a cases, you have to read one by one each option. So what is SLR? It is a statutory leverage ratio. Here is the leverage. Leverage is not the ratio. Statutory liquidity ratio. Yes, it is correct. So you have to mark second option. In this way, go through that, right? So see third option they have given statutory liquidity rate is given. Rate is not full form. See, static liquidity ratio. Liquidity ratio is correct, but static is not correct. So in this way, they will frame a question. Okay. If you are in a hurry, you will definitely you know the full form, but while choosing the option, you will make a mistake. So to avoid that, go by one option. See next, by changing SLR, RBI can first increase the credit expansion only, decrease the credit expansion only, increase or decrease the credit expansion. There is no control of RBI. So we know using SLR, RBI may increase or may decrease SLR, right? So correct option is the it may increase or decrease the credit expansion. Okay, very easy question. Now question number 33. RBI intend to make a borrowing of a fund by banks from RBI. Expensive, the word expensive, that means if RBI intend to make a borrowing of a fund by the banks from RBI expensively, that means if RBI lend money to the bank at a high cost, then what RBI will do? We know the lending rate to the bank is called as the repo rate, and to make it expensive, it will increase the repo rate. Okay, so first option is not correct, second is not correct. Increase the repo rate, it will be correct. We have to make a more expensive, so we have to increase the repo rate. Okay. Expand OMO. The similar question for 0.5 marks. See here, OMO stands for the open market operation. So first option is your correct option. See how similar options they have given. Open market organization, open monetary operation, none of the above. We will not mark none of the above, we know, but you may get confused in these three options. So remember, when you see such a type of question, expand OMO, in mind itself you have to say OMO stands for open market operation. So find open market operation word in the options. Okay. Next question number 35. Under sterilization operation, very important. Under sterilization operation, RBI makes the use of which of the following instrument? So friends, remember, what do you mean by sterilization operation? Suppose if there is excess of foreign currency, in the market, RBI will what do? RBI will purchase that. And to control the liquidity in the market. So that operation is carried out through the market stabilization scheme, that is called as a market stabilization scheme. Market stabilization scheme. And how that operation is also called as the sterilization operation. They also called as the sterilization operation. And remember, it is for that RBI how to purchase that forex, that will purchase through the MSS bond. RBI will have to purchase the MSS bond, that is the market stabilization scheme bonds. Okay, so when you see the word, remember the word, connection between the words. Sterilization is nothing but the MSS. Sterilization is nothing but the MSS, market stabilization scheme, and for that MSS bonds are used by the RBI. Okay, very easy. Now question number 36. See, the major objective of FRBM Act was, what was the objective? We have discussed earlier also. First, reduce the dependence of the government on a borrowing. Okay, help to reduce the fiscal deficit in a phased manner. It is also correct. And to eliminate the fiscal deficit and revenue deficit. So the main objective we have already discussed in the previous question, but here see, reduce the dependency of the government on a borrowing, it is correct. To reduce the fiscal deficit in a phased manner, it is correct. But see, but to eliminate the fiscal deficit is not correct. We have to fiscal deficit reduce. We don't want to eliminate the fiscal deficit. Okay, so third option is not correct. See how the question are framed, that is very, very important. You know the concept, but framing of question is also very, very important. Here in C, in a option in a C category, they have given elimination of fiscal deficit. There is no word of elimination of fiscal deficit throughout the chapter. Okay, so what you have to mark most wisely, that only A and B are correct. Only A and B are correct. Okay, we have to reduce the dependency of the government on the borrowing, also to reduce the fiscal deficit in a phased manner, but we don't want to eliminate the fiscal deficit. Okay, if we want to eliminate the fiscal deficit, what government will do? Earning is equal to spending, then there will be a slowdown situation in the economy. Okay, so there should be some fiscal deficit which is allowed. Okay, now question number 37. Bank rate is also referred as. The second time this question is repeated here, so you understand the importance of that question. The bank rate is also called as discount rate. Okay, what is a bank rate? We know RBI giving loan to the banks. Okay, that is called as basically a bank rate. It is also called as the discount rate. Next, question number 38. FRBM Act. The FRBM Act requires the government to place before the parliament 3 statements. See, this is important. Okay, so see here, according to FRBM Act, government need to place before the parliament 3 statements. You have to remember, they will ask how many statements. Remember, according to FRBM Act, government need to place 3 statements before the parliament. And what is the frequency of that? Each year, by each year, along with the budget covering. That means when you put the budget on the floor, at the same time the government need to give the 3 statement. You need to give the 3 statement before the parliament. Okay, now what are that? Right, and first they have given short-term fiscal policy strategy, and macroeconomic framework. It is not short-term fiscal policy because for 1 year, for each year we are demanding that statement. So it should be mid-term fiscal policy. So mid-term fiscal policy, it is correct. Fiscal policy strategy, it is also correct. And third, macroeconomic development. Macro means overall, so it is also correct. So most correct option here is the second option. Okay, mid-term fiscal policy is correct, fiscal policy strategy is correct, and position of a fiscal revenue deficit is not correct. Medium-term fiscal policy is correct, position of the economy is not, and macroeconomic framework is okay. So most correct option here is the second option. Here, see in the first question, short term fiscal policy, no, we want a medium term, it is wrong. Fiscal policy strategy should be there and macroeconomic framework should be there. Okay, so remember how to go such a type for such a type of question. What I want to tell you, important thing, remember, according to the FRBM Act 2003, the government need to place 3 statement each year before the parliament, and that must include medium term fiscal policy strategy, as well as macroeconomic framework. Okay, now question number 39, which of the following are tools of the fiscal policy? So we know the fiscal policy and they are asking tools. So see, government spending and CRR. So we know the CRR is the tool of what? It is tool of monetary policy, or monetary, money, RBI, remember. Taxation and SLR, no, SLR is also tool of monetary policy. Third, SLR and government, no, SLR is tool of monetary policy. And last option, government spending and the taxation, no, because in a fiscal policy we have having two types, the contractionary fiscal policy, expansionary fiscal policy. Okay, and through the government spending and taxation you can expand or control the economic activity. So fourth option is you have to mark as a correct option. Okay, now question number 40, which of the following is not a feature of a expansionary policy? We know what is expansionary policy. Let's go through the one by one by the option C. It increases money supply in the economy. Yes, it is a feature. It is used in case of recessionary situation. Yes, it is used in recessionary to expand the economy. Interest rates are kept high. If you want to expand your economy, you should reduce the interest rate. So interest rate should not be kept high. Okay, it helps in combating increase the economic growth. Okay, it helps in increasing the economic growth rate. Okay, it is also okay, but if you have to increase money supply in the economy, it is a correct. Recession situation, expansion policy is used, but the interest rate should be kept low for the expansionary policy. Then only people will take a loan and will have the economic growth. Okay, for the consumption will increase, supply will increase, economic activities will increase if the interest rate are low. Okay, now question number 41. See, the banks are keeping only a part of their deposit with the RBI in the form of cash reserve. This type of banking system is called. Remember friends, when bank are keeping part of their deposits with RBI only in the form of cash reserve, it is not only in the form of cash reserve. If banks keep their cash with RBI, this type of banking system is called as, first option, narrow banking, fractional reserve banking. See, the name itself, it is a self-explanatory. How? See, fractional reserve, you are out of your deposit, the fraction of your deposit you are keeping as a reserve. You are keeping as a reserve with the reserve bank. That's why it is called as fractional reserve banking. Okay, easy, you can't forget now. Okay, name itself, it is a self-explanatory. You have to learn word by word. Universal banking system, say this is not okay. Just second option. Okay, fractional reserve banking system. Now question number 42. See here. Whenever there is inflow of a foreign currency, RBI makes a purchase of a foreign currency which increases liquidity in the economy. To neutralize the impact of this liquidity, RBI undertake which operation? So before that I have explained the same question about the sterilization, right? Here I am not going to explain it again because we have already covered that sterilization part. Okay, so friends, remember, when there is a inflow of foreign currency, so that RBI will purchase that foreign currency and increases liquidity in the economy. And to neutralize that impact of that liquidity, RBI undertakes the sterilization operation under the MESS scheme, that is market stabilization scheme, that is called as the MESS scheme, and the bond used for that is MESS bond. Okay, very easy. How to remember? See the words, when there is foreign currency word involved, there should be sterilization and MESS. Okay, through the keyword you should able to mark the answers. Now the question number 43, the rate at which the banks park short term money with RBI by purchasing government security from RBI. That means bank giving money to the RBI, and by purchasing security, that means securities are going to towards the bank giving money to the RBI, that means it is a reverse repo. And why it is a repo? Because securities are involved, that's why it is a reverse repo transaction. Okay, now if it is without securities and money is lent by RBI to bank, it is a bank rate. Okay, that we have already discussed. I don't want to discuss again and again, because in this video already I have discussed it. So here if a bank park their money with the RBI by repurchasing or purchasing of security, you have to mark the reverse repo. This is very easy. Question number 44, if RBI intend to make borrowing of funds by banks from RBI less costlier. See what happening. Here is the RBI, here is the bank. The RBI intend to make borrowing of funds by bank, that means money is going to the bank are borrower, that means money is going to the bank. Okay, and it should be at less cost, that means low rate. Less cost, that means low rate. And what is the rate of that? We know this is the repo rate. Okay, and if we want less costlier, then definitely we have to reduce that repo rate. So find the see the options. In the fourth option, it is reduce the repo rate. Okay, so you have to mark a fourth option as your answer. Okay, now next 45th question. See, this is now we have started the case studies. See, Indian government initiated a number of steps. Some of these are here. Okay, they have given some data. See, first, the large scale public spending in all parts of the country to improve the road and rail network connectivity. Second, the provision for subsidy to the economically weaker and poor person in purchase of essential commodity through the DBT. Third option, the steps taken by government, increase in a tax rate for a higher income earner about 10 lakh and increase in the basic exemption limit from 2.5 lakh to 3 lakh for income tax payment purpose with change in the tax rate in this bracket. Okay, what government has done? First they have public spending in all part of the country for the road and the railway connectivity. For second is the there will be a DBT, direct benefit transfer, for the poor and weaker people. And third is the tax slab has been changed. For higher income there will be higher tax, and for lower income they have given some exemption. Okay, these are the three steps taken by the Indian or central government. Now we have to see the question based on that data. See, this type of case study may be expected. See, question 45th, the measure of a S1, the measure of a serial number 1 is mean to. So we have to read serial number 1 again. What is serial number 1? The large scale public spending in all part of the country to improve the road and rail network connectivity. Government is spending largely for the public road and the railway network. Now, so what it mean? First, change in the pattern of resource allocation, whether the resource allocated by the government, that is collection of fund, is changed or not. Improved aggregate demand, it is the correct, because there was a demand all over the country. There is a demand from all over the country, That's why for public spending in all part of the country, that it is on the demand of the public, okay, to improve the road and network. So here you have to mark the, for the improved aggregate demand, the government spending has been increased, okay. So you have to mark serial number 1 indicates, means that there is a improved aggregate demand. And distribution of income, no, nothing is distributed here. So you have to mark improved aggregate demand, because throughout the country there was a demand, there may be a demand for the good roads. That's why government has made the roads as well as the railway lines throughout the country. It is called as the improved aggregate demand. Now question number next question number 46. See, the measure at serial number 2 is mean 2. What do you mean by serial number 2? See, serial number 2 I have taken here. Provision for subsidy to the economically weaker and the poor person in purchase of essential commodity through the DBT. Okay, what they have done, government has started helping the poor and weaker people by the direct benefit transfer. So what is this? First, change in the pattern of resource allocation. Improved aggregate demand, no, we know what do you mean by improved aggregate demand. It is serial number 1. Distribution of the income, it is a distribution of the income, okay. Your income you are distributing to the economically weaker section by DBT, and DBT itself, it is a direct benefit transfer. So we are distributing the income, so you have to mark distribution of the income, option number 3. Now the next question you have to discuss, third, that is a question is that the measure of a serial number 3 is mean 2. What do you mean by serial number 3? See, this is the 47th question. What happen in serial number 3? The tax slab has been changed, okay. That means there will be higher tax for the more earner, and there will be exemption for the less earning persons, okay. This is the basic change in the tax slab. Now what do you mean by that? First, change in the pattern of resource allocation. Where it is pattern changed? Yes, resource allocation, resources is nothing but the income sources to the government, and the resource allocation pattern is changed. Tax slabs are changed, okay, it is correct. Improved aggregate demand, it was not the demand of the public to increase the taxes, it is not correct. Distribution of the income, so friends, see how income is distributed, it is also correct here, because the income, that is a pattern of resource allocation, that means the income is changed. How the income to the government is now changing, right? So the pattern of resource allocation is correct, and the distribution of income is also correct, because the people's money here, that income, basically the income of the people of a country, how it is being distributed, that is also going to be changed. But here the most correct option you have to mark here, the most correct. If you are asking, sir, be specific, this statement indicates what? So this statement basically indicate change in the pattern of a resource allocation, okay. So you have to mark first option, that a change in the pattern of resource allocation, okay. And now see, but here in some cases, if I have gone through some books, but same type of example, they have given the distribution of income is also correct, and change in the pattern of resource allocation, it is also correct. So both 1 and 3 are correct, given in some books, some references. So I want to bring to your attention what you will mark in the exam, that you have to take decision while reading what you will understand from that serial number 3, because see, the income tax payment purpose with a change in the tax rate in this bracket, basically they are changing the pattern of resource allocation, that means increasing the income for the higher earner, increasing the taxes, and also exempting the taxes. So I think both will be correct, Distribution of income indirectly when you are taking less taxes from the public, right? Basic exemption from for the income group of 2.5 lakh to 3 lakh. That means that that exemption has been increased, so indirectly it is a benefit to the people, it is a benefit to the people. So distribution of income is also correct here. So both 1 and 2 you may mark here, take decision here. You can study and discuss this again. Now the next question we will discuss, this is the last question, question number 50. See, they have given some information, right? No, this is not last question. I think we have some more questions. Okay, 48 to 50 we have to discuss. So what was that? It was 47. So for 47 both 1 and 3 is you have to mark. Now question number 48. So see, this data is they have given, so don't need to read that data. If you want you can read that data, okay, but I don't want to read because I know all the things. This is just blah blah blah. Based on that we have to choose the options. We will directly go to the questions. We are very smart. See, question number 48. With a change in the change in which of the following reduces the funds available with the bank for lending purpose? See, this is bank and this is RBI. How the funds with the bank will be less if the fund goes to RBI? And how the fund goes to RBI? By reverse repo rate, okay. And how we will reduce the funds available with the bank? By increasing, by the using the repo rates. That is question 48. That is change in which of the following reduces funds available with the bank for lending purpose, okay. So we know the reverse repo rate. Apart from that there is a CRR. What if the CRR is increased? Bank need to keep more money with the RBI. So CRR is the correct option. Bank rate is not correct. Bank rate is used for borrowing. Repo rate is not correct because it is also used for borrowing. Reverse repo and CRR are the most correct here, but they have given only CRR in the option, so you have to mark CRR, okay. So for 48 CRR will be our correct option. Now the if you want explanation you can read it, but I have explained to you. You can read by pausing the video. Next question, based on above information, which information which they have given here? You may read by pausing the video. I don't think you should read, you should directly go to the question. It is easy. Question number 49. Based on the above information, the rate of a discount which is used by RBI for rediscounting of commercial instruments from bank is represented by. So friends, see how it is represented. When the rate of a discount which is used by RBI for rediscounting of commercial instruments from bank is represented by. So friends, the correct option here is the C. Based on the rate of a discount which is used by RBI for rediscounting commercial instruments from a bank. Basically here is RBI and here is a bank. What happening? RBI is doing rediscounting of instruments from a banks. That means instruments are going from bank to RBI. In that return, RBI will give some money to the bank. Okay, this is the scenario, and this happen at a what rate? Basically, when RBI gives money to the bank, it is either at a repo rate. Okay. So we have to mark repo rate as your correct answer. Okay, it is not a bank rate because bank rate is borrowing, but there is no involvement for the instruments. Then MSP rate, reverse repo is not correct. So you may mark bank rate. Okay, so we will discuss this again. I have some doubts regarding the rediscounting. Okay, but definitely we will discuss this case study again. Okay, in a doubt section we will discuss, or in our group, that is a group of paid members. I will discuss this again. Okay, don't worry. So but here according to me the repo rate should be answer. Okay, through the explanation we will come to know what is the exact answer. Repo and reverse repo rates are used for repo and reverse repo transaction. MSF is used for when RBI lend to the banks for 1 day against the collateral of government security. Okay, bank rate used when RBI rediscount commercial bills from a bank. So what you have to use here is the bank rate. The correct option here is the bank rate. Okay, initially I have told you that I have some doubts, so remember this, that's why I have given some explanation here. See, the bank rate is used when RBI rediscount. See, I have told you in the beginning I have doubt about the rediscounting and discounting, right? Basically, so leave the part, leave. I have one shortcut. I have told you in the beginning what I have told. Discount rate is also called as bank rate. Whether it is correct or not, it is correct. So here the rate of a discount word is used, so obviously you can blindly mark bank rate. Okay, it is that much of easy. If you go by easy way, it is easy. Okay, if you get confused by the words, it is difficult. Okay, use some tricks. We know bank rate is also called as discount rate. Why? When you find the word rate of discount, blindly mark bank rate. It is very easy. Okay, now question number 50. Which of the following ensures that which of the following ensures that the solvency of a commercial bank? Basically, a solvency of a commercial bank is statutory liquidity ratio. It is correct. Not MSS, not CRR, not this. So basically, name itself, it is self-explanatory. The solvency of a bank is ensured by statutory liquidity ratio, the SCLR, right? Some part of NDS that your net time demand, net NDTL, that is net time demand time liability part is kept with the RBI in the form of government security. So friends, see here, remember, for SLR the maximum limit is 40%. There is maximum limit is 40%, but for CRR there is no maximum, no minimum limit for CRR. Okay, now friends, almost we have completed the 50 questions. This is the longest ever lecture of the advanced bank management, so it is very important that you should watch the video, get the concept clear, and definitely I will like if you ask me the doubts, and I will more happy if you bring the correction from the sheets. I will be more happier. Okay, so what you have to do, you have to subscribe our YouTube channel, which you have already done, no problem. You have to download the Android app from a Play Store. The name of the app is Bankers Zone CAIIB, and you have to join our Telegram channel also. For that you can search on the Telegram @CAIIBBZ, or you can directly search Bankers Zone CAIIB. Okay, so @CAIIB, this is the search you have to do on the Telegram. Okay, so these are the basic to do things. So friends, we will continue our discussion in the next chapter.